Right. I think the recent data points in terms of the rise in debt, the fact that demographics have continued to deteriorate, and GDP deflator, which is more important for us than the CPI data that came out recently, that's down to now minus 1.4 for China in the second quarter. So they have got this significant challenge up ahead of them in form of these 3D factors deteriorating. And the most important one, of course, within that is deflation. And so we put out this report, and our key conclusion is that China is better placed than Japan in 1990s. But we do think that the risk of them still falling in that debt deflation loop is relatively high. Now, the reason why it's better than Japan is essentially the most important variable that we should look at when a country is facing debt deleveraging and deflation problem is the gap between real GDP growth and real interest rates. So this is the most important variable. And on that front, China is doing okay as of now. Its real interest rates are well below real GDP growth. In Japan's case, what they had done is allowed real interest rates to be higher than real GDP growth for the first 4 years after the bubble bursting. So that was a mistake that they made. In China, the starting point is great. But what is important is to sustain this over a period of time, because this debt deleveraging problem is going to continue for a number of years. And one other interesting analysis that we did in this report is that in the past, we've seen that policymakers do tend to get hawkish after a period of debt build-up. And they want to do sort of the right thing, i.e. focus on reforms and not enough on reflation. But if you want to keep that gap sustained of interest rates and growth, you have to reflate with fiscal and monetary policy easing. And that's where we are concerned that China is not at this point of time acting quite aggressively to ensure that that gap is maintained.
I hear what you're saying. Historically, they tend to tighten prematurely before they've got a full recovery underway. But I mean, this situation is not new to China. I know that a decade ago, you were writing about the 3Ds, debt, demographics, and deflation with regards to China. But today, the situation is a little bit more challenging for China because debt is even higher now, while growth is lower, if not slowing.
Yeah, that's right. I think there are a number of factors which have changed. One is the debt level is higher, demographics have deteriorated even further, and deflation problem at a GDP deflator level is much bigger than what they had at that point of time. And the other most important challenge for them now is that the potential growth is lower than what it used to be at that point of time. But they can sort of share their own experience of, or rather, recall their own experience of what happened during that period.